Yeah. Thank you, Seema. Welcome to 2Q FY24 earnings call of Alkem Laboratories. From management side, we have Mr. Sandeep Singh, Managing Director, Dr. Vikas Gupta, CEO, Mr. Rajesh Dubey, Chief Financial Officer, Mr. Amit Gare, President, International Business, and Amit Khandelia, VP Finance. Over to you, Amit.
Thank you, Tushar. Good evening, everyone, and thank you for joining us today for Alkem Laboratories Q2 FY24 earnings call. Earlier during the day, we have released our financial results and investor presentation, and the same are also posted on our website. Hope you have had a chance to look at it. To discuss the business performance and outlook going forward, we have on this call the senior management team of Alkem. Before I proceed with this call, I'd like to remind everyone that this call is being recorded and the call transcript will be made available on our website as well. I would also like to add that today's discussion may include forward-looking statements, and the same must be viewed in conjunction with the risk that our business faces. After the end of this call, if any of your queries remain unanswered, please feel free to get in touch with me. With this, I would like to hand over the call to Mr. Sandeep Singh to present the key highlights of the quarter gone by and strategy going forward. Over to you, Sandeep.
Thank you, Amit. Good evening, everyone. As many of you are aware, we recently announced the appointment of Dr. Vikas Gupta as a Chief Executive Officer. Dr. Vikas Gupta has over 2 decades of experience in pharmaceutical industry, and his leadership and vision will play a pivotal role in our future growth and strategy. We are excited to have him on board. I formally welcome Dr. Vikas Gupta on his first analyst interaction. Thank you. We are pleased to report strong operational performance in the quarter, supported by significant gross margin improvements and operating leverage. We have observed a favorable trend in raw material costs softening, which has positively impacted our cost structure. Price erosion in the U.S. market has slowed down from high teens in last year. I am confident that our ongoing cost optimization efforts will persist in driving improved performance. In this quarter, it proved to be a good quarter for the company, featuring a year-on-year revenue growth of approximately 12%. Our EBITDA margin stood at 21.7%, while net profit after tax for the quarter is around 620 crores. During the quarter, we generated approximately 470 crores in cash, reinforcing our balance sheet to establish a substantial net cash position of around 2,900 crores as of September 30, 2023. Coming to our domestic business, we experienced a lackluster quarter one, and this trend continued in this quarter two due to sporadic and delayed monsoons. However, there was a noticeable improvement towards the end of quarter two, with a particularly positive upturn in the month of September. We are eager to capitalize on this momentum and anticipate stronger performance in the upcoming periods. Our growth during the chronic therapeutic segment continued to surpass market performance. During the quarter, we advanced by 2 ranks in anti-diabetic and 1 rank in neuro-CNS and cardiac therapy segments. Our trade generics franchisee remains a key driver in our growth journey within India. Moving to international business, for the second consecutive quarter, our international business has demonstrated its strength by surpassing 1,000 crores for the quarter. The performance of U.S. business was driven by volume growth in our core operations. Other international market growth was led by good performance in Chile, Europe, and Kazakhstan, and even Philippines to a certain extent. During the quarter, we have received 4 ANDA approvals, including 1 tentative approval. All our manufacturing facilities supplying to the U.S. are having an EIR as on date. We aim to sustain and carry forward this performance momentum into the remaining part of the year with a determination to surpass earlier EBITDA guidance of 16% for 24. With this, I would like to open the floor for Q&A. Thank you for being here.
Thank you very much, sir. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Sayan Mukherjee from Nomura Securities. Please go ahead, sir.
Yeah, hi, good evening. Sir, just a question on the U.S. We have seen, a good increase quarter on quarter. If you can elaborate, you mentioned about volume growth, but are there any seasonal factors and how should we think about the, next 2 quarters? And also from a slightly, medium-term perspective, how should we think about U.S. In the backdrop of we have seen, some reduction in R&D cost, just one ANDA filing in the first half. Because earlier there was a bit of conservativeness with respect to the U.S. So, beyond the next 2 quarters, how should we think about U.S. moving up in FY25-26?
Sure. Mr. Amit Ghare, you can take that question, please.
Thank you, Sandeep. Fine. The first part of the question, there has been small, seasonal effect in the quarter 2 numbers towards the end of September. And honestly, the season never actually ended this year. The growth for anti-infectives has been strong since the last season started. Other than that, there has been nothing, one time or nothing, substantial that contributed. So it's kind of overall business that contributed. For the next 2 quarters, obviously our base is now higher. So repeating this kind of growth obviously is going to be challenged year on year, that is. But we are obviously looking at overall full year FY24 over FY23. We are looking at high single-digit growth in dollar terms. That's where we stand. On the R&D side, I'll hand it back to Sandeep and Dr. Vikas.
So on the R&D side, I think H1 is not an indication of predicting how many ANDAs will file for the year. So they'll be back-ended, but we'll be filing close to 8 to 9 ANDAs. And second, yes, in small molecules, we have cut back some R&D. I mean, you all are aware that we are doing clinical trials for denosumab for US market. So it's not that we are kind of really cutting back or getting very negative on US. We have just decided to allocate slightly less money and also change the color of our spending from small molecules to, let's say, hopefully more complex things.
Okay. And just one more question on the tax rate. You had guided for, I think, higher tax rate earlier, around 18%. So where do we stand? Is that guidance holds for this year and next year?
Please.
Yeah. Yes, Sam, yes, our earlier guidance was somewhere close to 18%. But we reviewed our revenue generating from eligible unit, that is Sikkim, and some bottleneck we planned out, and we revised our guidance from 18% to 12 to 15% for this year.
And so this will hold for next year as well?
Next year we'll come back to you during our third quarter's result, but I think we'll be somewhere closer to it.
Okay, and when does this Sikkim benefit last, and when do we see a step up in tax rate?
March 26 is last. So from April 26 onwards, we don't have fiscal benefit over there.
Okay, got it. Thank you. I'll join back to you.
Thank you, sir. We take the next question from the line of Kunal Dhamesha from Macquarie. Please go ahead, sir.
Thank you for the opportunity, sir. Just continuing on the tax rate, so we are now guiding for 12 to 15%, and H1 is around 9%. So does that mean that we are more or less would be at 18% for the next couple of quarters?
On analyzed basis, we work out our tax, but in this half year, there are some element towards catch up. That's the reason it is on lower side. But on analyzed basis, our estimate is 12 to 15% only, Kunal.
Yeah, so that means second half would be 18%, right? Like close to 18%.
Not 18%, somewhere around 16% kind of, 15-16%.
Okay. And secondly, on the U.S. business, you said that the price erosion has kind of reduced. But any number that you would or range that you would like to put out? So earlier you alluded it was into like low double digits. Where are we now, and what has kind of changed, and how long do you see that continue?
Mr. Ghare?
Currently, the pricing deflation is in the mid-single-digit numbers, around 5 to 6%. That's where it is. Future, we hope it remains in those levels, but future is future.
And have we supplied any shortage product in this quarter which would have helped us?
No one-time opportunities per se, significant one-time opportunities. That will answer your question.
Okay, sure. And the last question on the India business. So we were in the process of expanding our field force by around 10%. So are we kind of more or less done there? What is the update?
Yeah, so on India business expansion, I think we are more or less done. We are not planning any big expansion in India business. The focus will be on increasing productivity now. And whatever people we have added in the recent years, we are just planning to, now create the operating leverage and get the productivity up, for our people in the business. That remains our topmost focus.
Sure. And what would be the MR's number as of now and the line manager?
So we have around 12,000, the first line. And then proportionately, you can take the number of managers.
Sure. Thank you. I have more questions. I'll join back to you.
Sure. Thank you.
Thank you. We take the next question from the line of Rashmi Shetty from Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity. On the softening of the raw material cost, have you seen correction in penicillin and cephalosporin prices?
Yeah, so the softening of API prices we can feel, but few anti-infectives, I think still it has not come back to pre-COVID level, and particularly product where PNG component is there. So PNG still it is going on at $30 level. So I think pre-COVID it was somewhere close to $8 to $10, and now still it is $28, $30. So you can understand still we see scope there. But the rest of the major APIs we feel more or less it got softened, and we hope going forward for a few months at least we'll be able to have a similar kind of situation for India.
Okay. And so with the improvement in the India business and, the base improving in the, abating price erosion in the US business, do we upgrade our gross margin guidance, from currently, whatever you had cited earlier, 59% to around 60-61% now for this year?
Yeah, gross margin improvement is of course there, and that is good thing. And if you recollect in our last earnings call, we issued guidance of 59.5% on annualized basis. I think we are going to remain. Of course, you rightly said, beside API, a better product mix, and particularly in US business, we got better gross margin there. So I think things are going as per our estimate only, and API prices, better product mix, and all these things are helping us, and we are hopeful. Guidance we have given, we are going to remain there only and not below that.
Okay. And sir, on your India business, if you can give what was the trade generic business contribution and what kind of growth have we seen in that business?
So around 17 to 18% is what our trade generic contribution. Trade generic. So that's chronic or trade generic?
Trade generic.
That's around 25%, kind of 20 to 21% kind of contribution, and the growth has been around 6 to 7%.
Yes.
So that has been the trade generic.
Okay. So first of full year, are we maintaining our high single-digit growth guidance in the domestic business?
Yes, pretty much. And that is where we are trending mid, single digit, but we are expecting it to be higher single digit, on an annualized basis.
Okay. And my last question is related to the Enzene Bioscience. What was the sales contribution which has come in from that? And how do we see the profitability also in this quarter?
Sales contribution, you asked, ma'am?
Yeah. From the CDMO and biotechnology products from the Enzene Biosciences.
The quarter was around 80 crores. In the quarter two. And the second question was on profitability.
Yeah, on the margin front.
Slightly negative, but close to break even. But I think next year we will be closer to break even. I think this is a very early stage for biotech. So honestly, for the next 3-4 years, we really should not expect it to generate a lot of profit. Even if they break even, but I think its growth is a priority. Yeah.
Sir, on the sales front for Enzene Biosciences, we have seen a sharp jump from quarter on quarter. So we have done any new launches during the quarter?
I think plenty of new launches. Enzene also does a B2B business with other pharma companies in India. So yes, they have driven a lot of partnership. We have launched 6 products already, I guess. The 7th one is approved. It is the generic of Lucentis. It is ranibizumab. So Enzene will have it's getting to take off now.
Okay. All right. Thank you, sir. That's it from my side and happy to be there.
Thank you. We take the next question from the line of Vinu from Elara Capital. Please go ahead.
Hi, good afternoon and congrats on a great set of numbers. Just to explore a bit further on the margins. So you have said that these are broadly sustainable, but still, just to drive a little deeper, this quarter margin has come exceptionally higher with both gross margin and as well as other expenses being lower. In the light of this, you think this level is sustainable going forward at these levels, or we should think about it like somewhere in between where it was and this quarter?
I think forget the quarter. Quarter is great, but this is not sustainable on an annual basis. I think we will be close to 16.5 for this year ending.
Okay. So this quarter in that sense is a bit of an aberration. Okay. And second, any guidance on, any update on launch of dabigatran and in the US and Suprep in the US?
Amit, you can take that. But knowing Amit, we don't give guidance on Amit. You can take it. Sorry.
Yeah, we don't talk at product level, but dabigatran we obviously launched. We are the only one of the 2 generics which are approved, and we continue to face supply chain challenges.
Okay. And any indication of resolution of those supply chain challenges?
We are always working towards, resolving them sooner, but then there are, few things required at FDA end as well. Because we were adding a secondary source of API. I think we had disclosed that earlier. And we are sort of depending on that. And that obviously needs approval from FDA. The primary source obviously continues, but we don't really get supplies from there. So that's been a supply chain challenge for us.
Okay. And you don't want to guide on Suprep?
No, Suprep we haven't launched. We haven't approved. I haven't been approved and haven't launched as yet.
Okay. Thank you.
Thank you. We take the next question from the line of Bansi from JP Morgan. Please go ahead.
Your voice is too low.
We take the next question from the line of Bansi from JP Morgan. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just probing on margins once again. So, at this, in this quarter we are at 61%, and this is despite Pen-G prices, remaining elevated. If you were to just take a, medium-term view, and assuming that, Pen-G prices do ease off with, production capacity coming on stream next year from Aurobindo, what is the upside that one could expect, on the gross margin front?
See, Bansi, our estimate, it says our gross margin is going to remain somewhere close to 59.5 to 60%. Of course, we have considered PNG price, what is going on today. So nobody knows. The price comes back to, say, $9. Then accordingly, there would be upside.
If the API guy pass it on, you never know, sir.
But we are realistic in our estimate, and we feel on an annualized basis we are going to remain somewhere close to our guidance.
Even Aurobindo, when they come on stream, doesn't mean get it cheaper.
We don't know.
We don't know. Yeah,
it will face it as it comes.
But even if they were to say, sell at the market price, is there any savings, from forex perspective or from, logistics cost saving perspective?
Yeah, savings are going on. Therefore, you see those numbers.
What's he saying on PNG?
No, PNG there is no saving. How can that be?
No. Bansi, I think it is hypothetical as on date. We will have more clarity on it once that really hits the market.
Yeah.
So before that, anything would be only speculative.
Okay, got it. And secondly, my question is on employee cost. That has reduced sequentially and year over year as well. So any specific reason for that?
Yeah, we've run internally, various cost saving projects, and the cost is lesser because we have, optimized our manpower costs in plants and R&D especially. So that is sustainable, and that is something, that has really resulted into it. Of course, we don't see it sequentially continuing to fall, but I guess, the initiatives that were taken that have sort of resulted in this kind of, savings on the manpower.
So basically assuming normalized growth on this base from here on onwards.
Yes.
Okay, and lastly, my question is on, our strategy for the chronic business of ours. So if I were to take a longer term, historical trend, Alkem's market share, has remained, somewhere around 1.8, 1.9% in the chronic segment. We've been in the business for, some years now. On a small base, the growth rates have been good. But, how do you make, meaningful gains from here on, and how do you increase the productivity of MRs in this particular segment from here on?
Yeah, absolutely. So chronic, we have a clear strategy that we have in place, and that's one of the most important areas and levers of growth for domestic business in India. Even now, we continue to outperform in one or two segments in chronic, especially if you will look at the anti-diabetics. The recent launches have done pretty well, and there we have much higher market share than as compared to the, overall market share in chronic business. As you said, we are focusing on improving the productivity and getting our top line growth as well as a profitable, top line growth in especially in the chronic segment. So I guess our journey of growth in chronic, would continue. We would continue to beat the market in chronic, especially on the anti-diabetic side and cardiology. And CNS, these are the areas where we are making good inroads, especially with the key products, that are going to be big brands for the future. So in the coming quarters, you will see, good growth continuing to come out of the chronic business.
And the investments pertaining to MR here, are all done with?
Yeah. So as I mentioned, there are no expansion plans, so to say. Of course, there will be minor additions here, there, which we may continue to do as and when the business needs it. But the game plan over there is more on increasing the productivity, and that's the prime focus. And chronic, whatever manpower allocation also had to be done, that is done, that is in place. Now the whole game is about increasing the productivity and gaining market share.
Understood. Thank you.
Before we take the next question, a reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. We take the next question from the line of Hussain from Canadian Capital. Please go ahead, sir.
Yes. Am I audible?
Yeah, please.
Yes. Just wanted to understand on the chronic side, so how are we planning to ramp up and increase our share in the chronic side in the overall share of our revenue? That is question number one. And secondly, on the US side, as we see, most of the pharma companies are saying that the pricing pressure has eased, and now most of the companies whose base business has started to improve. So how do we see our base business improving, and how do we see things going forward? And since we are now conscious on filing the ANDAs and capital allocation, so since the US business has started to improve, so how are we strategizing our growth in the US piece, and how do we see the US as a share of the total revenue increasing going forward?
So I'll take it, first on your question of chronic. I think I already answered, when Bansi was asking this. Chronic is a very important area and important lever of growth for us at domestic. Our key focus areas over there, which are cardiac, diabetic, and CNS. So in all these businesses are growing strong double digits. So that is how I'll put across in terms of the growth numbers. The growth will be largely, it is not a manpower-led, expansion-led growth. It is now going to concentrate on few brands that we are going to build for the future, and that's what is going to drive the growth. That's on the chronic side. And we are improving our profitability of that business with every passing quarter. That's the other piece in terms of the chronic business. With regards to the US, like Amit also already answered, the price erosion that was seen earlier, in the US market has eased out, this year. And same is the trend that we have also seen in our business. So, our business also has not seen that kind of price erosion that we were seeing earlier. So we are pretty much in line with the market. Now, in future, whether the prices again, begin to deflate, only time will tell. But our expectation is that should not be the case, because we are assuming in many segments, the prices have sort of, bottomed out, or they will continue to erode at a mid-single digit, kind of degrowth, that we would see on the pricing. With regards to ANDA, I think we've already answered that we are targeting around 8 to 9 filings even for this year. So going forward, we are picking up those products and those markets, where the payback of entry to the market is much more profitable than what it is, and which are less likely to see that kind of price erosion. But in US market, how it plays out, it's only after the entry of the product to the market that we will get to realize, that we'll get to see.
Got it. And just one question on the anti-infective. So our growth has been 3.7% in the first half of FY24, which was lesser than the IPM growth of 5.7%. So any specific reason where we lacked in terms of the anti-infectives?
So I guess we are pretty much in line, I would say more or less little bit here and there as compared to the overall market growth, but that's largely on account of our higher dependence on certain geographies, which saw much sluggish growth even in terms of market. So weighted average for us, has come into play. So I think that's not too much of a concern. We are I would say on an H1 basis, we are more or less a little bit here there in line with the market growth.
Got it. And just last one question. So the new CEO, Mr. Vikas Gupta, has joined in. So any specific mandate?
Just to let you know, this is Vikas this side who's answering your question. But yeah.
Oh, sorry. So just last one thing. So just wanted to understand, sir, any specific mandate that has been given to you in terms of the company's growth that has been given in terms of how to streamline or how to ramp up the overall growth and taking the company to the next level? Just wanted to understand from you.
Yeah, so no different from what the guidance has been given to the market, in every quarterly call. So I guess it's pretty much the same mandate that I have, and I will make sure and make my best efforts to meet up all the expectations that have been laid out.
Got it. Okay, that's the only question. Thank you so much.
Thank you, sir. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we request you to rejoin the question queue. We take the next question from the line of Chirag Dagli from DSP BlackRock. Please go ahead, sir.
Yes, sir, good evening. Thank you for the opportunity. Sir, has the full benefit of cost-saving initiatives in the U.S. played out in the second quarter, or more of that is expected as we go along?
Cost control, is this what he asked?
Yes, sir.
More or less, but I think it's ongoing, but yeah, more or less. We can't keep cutting it to the bone, so I think we have done that more or less.
Understood, sir. And sir, U.S. prices still seem to be eroding, albeit at a lesser extent, but that should not have helped our gross margin improvement, correct? Because prices still continue to erode unless raw material prices have actually fallen even more than that erosion.
In fact, I was talking on mix, our sales mix. So product having better margin, they contributed more in these sales. So that was my meaning.
So U.S. gross margins, how would they have behaved, sir?
So if better margin product we sell more, then definitely we are going to have better gross margin also.
The mix in the U.S. is also better, is what you are indicating.
So I'm talking
mix in U.S. only. We are talking about mix in U.S.
Primarily, yes.
Understood. And just the last question, if I can squeeze, sir, how has October been for the India business?
Yeah, it's been fairly in line with the market. So it has been a good month. Yeah.
Okay, thank you.
Thank you, sir. The next question is from the line of Nitya from Bernstein. Please go ahead.
First, the gross margin expansion.
Nitya, you are not clearly audible.
Is it any better? I've just come closer to the mic.
Slightly better, but we'll try our best. Go on.
So on the gross margin expansion, what I'm trying to understand is even though you've achieved a substantial expansion in this quarter, you're still guiding to a fairly subdued number by the end of the year. So if you can help us understand what were the contributors, at least if you can rank order the different contributors, raw material prices improvement, U.S. pricing improvement, mix improvement, so that we understand what is possibly one-off and what is possibly likely to sustain in the future.
So there is nothing one-off in this quarter, Nitya, and our guidance is for annualized. In fact, guidance we have given earlier, I think nothing significant change is going to happen. In this call only, earlier analyst, he asked what is going to happen when API prices, it is going to get further reduced. So all those are future, and we do not want to comment. Our estimate and understanding, business projection we have, we are confident we'll be matching 59.5% guidance we have given. And this I'm talking on annualized basis. Quarter 2 is not in all respect indicator for annual. So 59.5% I think we'll be able to achieve.
So just to add to it, Nitya, the mix that we have in US, we are not sure whether the same mix would continue in the coming quarters as well. So that you may still, if you want to qualify as a one-off, you may look at that. So the whatever has been the addition on account of mix in US, we may not see, but whatever has been on account of the raw material pricing easing out, we expect it to remain, that way. If not become better.
Thank you for the clarification, Vikas, and good to see you on the other side of the table.
Thank you.
I have just one more question on denosumab. What are your thoughts on how you plan to commercialize the product in the U.S.? Would that be in-house? Would you find a partner?
Denosumab, yeah. So I think we can do it in-house, but we're also open to find a partner. I think we are still in the early days of switchability and all that in the U.S. So 2026 is what we think we could do, late 2026. So I think we will reach that stage soon. But as of now, I think we could do it on our own.
All right. Thank you and all the best.
Yeah.
Thank you. We take the next question from the line of Gagan Thareja from ASK Investment Managers. Please go ahead, sir.
Yeah, good evening. Am I audible?
Yes, you are.
Yeah. So the first question pertains to the cost-cutting program. At the start of the year, you had indicated that for US specifically, you had crore cost-cutting program. That's the annualized number. Are we trending at the 250 crore annualized savings?
So I don't think 250 crore it was alone for US. I think we never quantified any amount or outline any amount on account of cost cutting. Yes, we do have a bit of margin improvement drive, and not to certain extent on larger extent that has started contributing to our profitability, and that's the reason we started having better EBITDA margin also. So it is combination of USA. It is combination of R&D, domestic plants also serving to USA, and even plants serving to domestic business also. So it is all across.
So I understand that, sir. The number I am simply quoting from with reference to your past conference call. So
So that was not for you. That was overall corporate. That's all we are saying. We are not saying the number quoted was wrong. It was not for US. That's all we are saying. So that includes India spend, a lot of stuff also. R&D.
Yeah, but have you been able to achieve that target, or you feel there's room?
Close to it. I think from the numbers you can see that we are doing well, so we are obviously achieving it.
And I mean, you indicated that India growth in the chronic therapies now the focus is more on profitable growth. You're looking at improving sales productivity. In principle, that is another margin lever. If you're able to execute what you intend to, which is to improve productivity, theoretically speaking, your margins should see further room for growth, even with gross margins being where they are. And in any case, gross margins improve as chronic grows at a higher pace than acute because it comes at higher gross margin. Is that line of thinking logical and correct?
It is absolutely logical, but we gave you guidance of this year. Doesn't mean that beyond that will not improve. So obviously, logic is correct. I don't know what we're going to get at, but yeah.
And that's what we intend to do.
Thanks. And the final one, sir, any thoughts on capital allocation given that very strong cash position that you have currently?
I think same as I said last time, but we'll be slightly more open to M&A opportunities going forward. But one should not read too much into it. We'll take our time to understand, but we are more open than last few quarters, what I've been telling. So we will scout for some M&A opportunities in the chronic segment and things like that. However, don't expect anything to play out in the next few months or something like that.
Right. And final one, ROW, you had a good year this year so far. Could you elaborate and delve into why we are seeing that strong leg up and can we think of a higher growth as being sustainable in the ROW markets for you from there on?
Yeah, I think it's sustainable. And Amit, maybe you can take that, Amit. I'm sorry, but yeah.
No, you were answering right. I mean, yes, it's very much sustainable. We've gone to only a few geographies we've targeted, and we are obviously trying to grow business in those geographies. At the same time, obviously, every year we try and add one or two markets to enter. So the growth that you witness is a combination of all of that, and it is very much sustainable.
Thanks. I'll get back in with you. Thank you.
Thank you, sir. The next question is from the line of Madhav Mata from Fidelity Investments. Please go ahead.
Yeah, hi, good evening. Thank you so much for your time. Joined the call a little late. I just wanted to check that the US sales, which you all said that mixed tailwind might not last. Just wanted to understand what happened here. Like, it is a one-off opportunity or what exactly played out and then why it doesn't continue? If you could just help us understand.
Amit, you can take that tough question, please.
Sure. No one-offs, so there were no one-offs, but a combination of a few things. First and foremost, obviously, lower price deflation compared to previous years. Second is the first half for last year was a low base, so growth here obviously looks better. And some new product launches. And overall product mix has, kind of helped us. Some seasonality effect, the season, for the flu season and, the overall season never really ended from last year. So the summer months also had good growth on the anti-infectives. So a combination of all that has led us to these numbers.
Okay. You said that tailwind, did I hear it right, that it may not continue in the coming quarters or it will continue? Sorry, I missed that part.
So it wasn't about tailwind. What we said was the mix that we have got, in this quarter may not exactly be the same in the coming quarters, So the product mix might change, which might change the gross margin in the US business, just to clarify.
Okay. All right. Thank you.
Thank you. A reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. Take the next question from the line of Kunal Dhamesha from Macquarie. Please go ahead, sir.
Thank you for the opportunity again, sir. One on the denosumab, what is the expected R&D spend on this product?
Yeah, it will be like between $30 to $40 million. Hopefully closer to 30.
$30 million.
This is the clinical trial cost. So this is the CT cost. R&D cost you could add up $3 million.
Okay, and this is right now in the R&D phase, not in the clinical phase.
Clinical stage.
It's in clinical stage.
Absolutely. Yeah. We are already disclosed. We are doing phase 1, phase 3. The past.
Okay. And this $30-40 million, is it somehow baked into current R&D numbers, some form or
yeah, in every form, as in the right form. It's there.
Okay. Yeah. So, how many quarters it's going to be there?
I think it is going from the last few quarters. Maybe for a year it's going on. Yeah. On the lumpiness, I'm not sure. It will go on for the next 6 months, I think. 6 to 9 months.
Okay. The reason I'm asking is that R&D is like down almost 10% on a first half basis in first half on a year-on-year basis. So I'm just
yeah, as I said, it's not like a mathematical H1 is equal to H2. So even we have 5 lesser NDAs. So H2 you'll see a lot more NDAs and things like that. So yes, we have cut some R&D spend on small molecules, as I said earlier, but we continue to spend on R&D.
Okay, sure. And second on the trade generic business, we said it's grown at around 6-7% year-on-year in this quarter. So is it primarily because of the absence of the acute season, or is there any competition?
No, it's absolutely. It's more to do with seasonality, because on the generic side as well, we have big anti-infective products. So they have seen sluggish growth. Otherwise, there's no major reason for that.
Okay, perfect. And last couple of questions on the US business. So one on the dabigatran, would we have supplied some channel filling quantity in this quarter?
Mr. Ghare, you can take that.
No sales on dabigatran in this quarter.
But I think we earlier said we launched the product in this quarter.
No, we did not say this quarter. Amit just said he has launched it. He did not mention he launched in this quarter. Amit, you can.
We launched in, yes. We launched in 2022, last year, June 2022 or June, July period.
Okay, and since then we are facing the supply issues on and off.
We've done maybe small feeds after that or some sales after that as well, but certainly not this quarter.
Perfect. And last one on Suprep. So is there anything pending from our side, or is it largely pending with the US FDA side?
I think it's still with FDA, like I said. So sorry, Sandeep.
No, Amit, I was just saying to take the question. Nothing, sir. Please continue.
All right. No, so it's pending with FDA, and then obviously the launch is pending. So we are not forecasting it in immediate future.
Okay, perfect. Thank you and all the best.
Thank you, sir. The next question is from the line of Yash Tanna from iThought PMS. Please go ahead, sir.
Thank you for the opportunity and congratulations on a very good set of numbers. So we spoke about productivity improvement. So can you firstly give the breakup of productivity between acute and chronic and company overall, and what sort of a productivity improvement are we targeting going forward, probably in this year and the next?
Yeah, Vikas. Yeah. So currently we are at around overall basis 4.6 lakh activity that we have.
This is for chronic, right?
No, this is overall. This is overall. And of course, acute is much higher and chronic is much lesser because we have lesser business over over there. As I mentioned, that we are targeting a strong double-digit growth as far as chronic business is concerned. So that will even bump up our overall productivity. And of course, the increase in productivity would be much higher in chronic than as compared to acute, which is already at a higher productivity of close to around 7 lakhs.
Sure, right. And any numbers that we are trying to target for the year or the next year?
No, as I mentioned, you can see a strong double-digit growth, on that. So I guess that is what we are targeting.
Yeah. Great. And sir, you mentioned, Sandeep sir mentioned about being slightly more open to M&A opportunities. So which areas will be looking at, and what is the size that we'll be looking at? I mean, would we be willing to take some debt for the same, or will it be from the cash that we have?
I think we have enough cash. We're not going to take debt and do a $1 billion acquisition, anywhere close to that. So I think chronic segment is what we are looking at, but we'll come back more granularly as we kind of evaluate. But chronic could be a good segment. OTC consumer could be a segment too, but I think chronic would be the most highest priority.
Sure, sir. Got it. And congratulations, Dr. Gupta, on the new role, and best of luck to the team.
Thank you. Thank you so much.
Thank you, sir. We take the next question from the line of Gagan Thareja from ASK Investment Managers. Please go ahead.
Yeah, sir, based on your guidance, I mean, for this year, 16.5% possible OPM. Second half, if you back it out, comes to around 15-odd% if I have my calculation, correct ballpark.
Yeah.
And last year, second half was around 15.5. I'm wondering if you have the benefit of the cost-cutting programs and some tailwinds on raw materials. Shouldn't it be, reasonable to presume that second half should also be better YOY in margin terms, whereas the guidance implies that it won't be so?
I think it comes back to Vikas's answer also. See, the mix was good this quarter. If it remains, we could beat that. But in all reasonableness, we know that this year also be very sluggish here. So, and quarter 4 always is weak. So quarter 4 in a sluggish year could be weaker. So I would not anticipate like a huge positive thing. And your calculation is very right. I think we will be around close to that.
Okay. But don't you think that, the secular bit there is the costs that you control, and if that is the case, ceteris paribus, in principle, even with the same sort of sales.
See, last year, quarter 3, I think EBITDA was 19.7, if I am correct. You mentioned some other number. Quarter 4 was 12.2.
Yeah, I'm saying last year, second half at 15.5. Not
right.
This one.
Yeah, so we'll be close to that.
Okay. All right. Thank you. I'll get back in the queue.
Thank you, sir. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you everyone for attending the call. If any of your queries are unanswered, please feel free to get in touch with me. Wishing you all a very happy Diwali. See you next year. Wonderful.